Hello and welcome. You're watching Captains of Industry from Kigali, Rwanda. I am Godfrey Mutizwa. Let me see how much you understand the Rwandan financial industry. The man I'm talking about has been CEO of this particular bank since 2007. And before that, he was the Deputy CEO and Deputy Managing Director between 2005 and 2007. During his tenure, he led the bank to become the second domestic company to be listed on the Rwanda Stock Exchange. And in terms of strategy, he helped the bank grow its market share to just over 30% during that period. And at the same time, he increased the branch network from 10 to 70 branches we're talking about at the end of 2014. At the same time, in terms of strategy, he led a very aggressive strategy to try to increase the number of channels through which the bank could reach Rwandans, including mobile vans, agency banking, internet banking, and point of sales, etc., etc. Do you know who I'm talking about? I'm talking about Dr. James Gatera. He's the Managing Director and Chief Executive Officer of our Bank of Kigali. Joined me in the studio recently to discuss his journey so far and some of the key learnings he has picked up along the way. Let's take a look. James, thanks for your time and welcome to Captains.
Thank you for having me.
That's an impressive reading. I mean, when you look at those numbers, growing market share to about 35% and then increasing the branch network, what would you say has been the key driver behind that growth? Or were you the right man in the right place at the right time?
I think what happens in an organization, one has to understand the strategy. What is the vision for the organization? And then you've got to put the right men and women to implement that strategy. So implementation also becomes key. But then again, you've got to look at other stakeholders that would support that vision, the implementation of that strategy. And this is what we did at Bank of Kigali.
And in looking for those achievements that you've been able to get, was there specific targets that you set for yourselves that you wanted to achieve, and have you been able to achieve those targets?
Yes, indeed. We are always having each year, at the end of the year, we sit down, senior management and the board, and then we map out what we want to achieve the following year in terms of how do we want to grow our balance sheet, for instance. How many loans we have to give out, how are we going to mobilize the resources, how many people we have to hire, how many branches we have to put in place. So yes, we have these key performance indicators, and then we sit down and look at the tools for us to achieve these objectives. And this is what we have been doing. And to answer your question, yes, we sit down and say, these are the things we want to achieve, and this is how we are going to achieve them. And we have been achieving these targets, by and large.
I was going to ask if you are where you wanted to be 10 years ago, when you were setting up those targets, when you were getting the bank to grow.
We are pretty much where we wanted to be.
Okay.
And now that we are where we wanted to be, our next thinking is what next.
Right.
And that is what people should watch the space.
Absolutely.
Of where Bank of Kigali is going next.
I'm hoping that you'll share some of that with me. But before we talk about that, I want to understand how difficult it was for you to grow in the past decade that you've been helping in the strategy and development of the Bank of Kigali.
You know, Godfrey, when people are in a position we are in, it's not always easy. It's not always simple, because there are a number of things that you have to put in place. You have to talk to different stakeholders to see things your way, to see what you want to do. But Bank of Kigali, we've established a brand where when we talk to people, when we are looking for customers, when we are looking for skilled talents to put in place, it is becoming much easier than when we were starting out this journey. Because when we started out, I remember we had less than 10 branches countrywide. And so reaching different people was a bit difficult. We had limited products to sell to people. So even marketing the bank was a bit challenging because what were there to market? The skill sets that we had in place we are wanting. So building all these things was not easy, obviously. But I'm glad that where we are now, we are confident that that Bank of Kigali will continue to grow from strength to strength.
Yeah. When you look back from when you started, and as we said, this is more than a decade now. I mean, banking must have been very different then, and then we compare it to what it is now. The change and the transformation has been vast. What did you say have been some of the key things that you have had to master as CEO of a company in trying to make sure that the strategy is right to suit the environment, while at the same time taking care of the disruptors?
I think it's always to know, it's always good to know what you want to achieve and how to achieve it. And so, and any company, you would have to understand that there are different players with different needs, and how you are going to play your part in the whole context. Because as banks, you have to play a role in socio-economic development of the country where you operate.
Yes.
Otherwise, then it would be difficult for any bank to survive if they are not playing the rightful role that the bank should be playing, mobilizing resources and passing on these resources to people who need them. That is collecting deposits and then giving them out as loans to people. But also people want these things in a faster, friendly environment, because if you don't connect emotionally with your customers, anybody will be coming and they will be moving from one bank to another. But the moment you've established trust with your customers, then they will always be permanent and they will even bring more to you. So understanding the rightful role of what you are doing has helped a lot, and how you create value. Our motto is financially transforming lives. And it always pleases me to see that when we started and now, how many lives you have transformed financially, and how we've been a part and parcel of building this economy. Because when I go around the country and see most of the developments and projects Bank of Kigali was a part of, I become very proud of what we have achieved as Bank of Kigali, of what we have achieved as a nation. I think the story of Rwanda is pretty much, when I look at how Rwanda has developed, it shows me even how Bank of Kigali has gone along in the same path. And so it pleases me to see that when you have good intentions, when you want a win-win situation, you always do well.
The other day I had a conversation with someone in the banking sector, and they were saying to me, I said to him, what are the key things that you guys are dealing with on a day-to-day basis? And he says, when you look across some of the other banks and you look across the whole financial sector, almost every CEO is trying to get the customer out of the branch. Is that what you guys are doing? Do you want your customer out of the branch using technology?
I think it's not getting them out of the branch, because we also need them to see them and talk to them. It's not, see, once you become mechanical, and once you don't have that emotional connection with your customers, I think you lose out. So, but you want a situation where customers, if they don't have time, they can be able to transact. They can go to the internet and do their business. They can use the phone banking and do their business. But there is when they need advice. There is when they need to see a person. There is when, they want to sit down with a bank official.
But that's cost, right?
This is why I say there is a win-win situation. Because the moment you become too impersonal, too mechanical, then there is some element that you are going to lose. Because anybody then can be able to put up IT to put up phones,
Absolutely.
to put up internet, but that emotional connection will be lost.
Which is my next question. How do you deal with the telcos who are coming in? Because from us looking outside as non-banking people, we see telcos muscling into your territory where banks have traditionally played in without any competition. How do you approach them?
I think what we have done in Rwanda, we've turned this around. For instance, Bank of Kigali for one, we've approached the telcos and said, guys, look, we can work together. Okay. And this is how. This is why today, if you have money in a Bank of Kigali account, you can be able to move money from your account to the mobile phone. Or you can move money from your mobile wallet to your account.
Right.
So it can go back and forth.
It's seamless.
It's seamless. And what we have done again in Bank of Kigali, we've said, look, we can open up our branches for you so that people who have money on their mobile wallet can go to any of our branches.
You're making them collaborators instead of competitors. Of
competition. So we want to make them look, if we collaborate, it is going to be a win-win. So Bank of Kigali always thinks of a win-win solution.
Sure.
Not a win-lose solution.
Do you think there will be a day when telcos will take over the role of banking and there will be no banks?
No, that day will not happen. You see, banks, they have what they have to do, and telcos have what they want to do. So if you look at what banks are doing and what telcos do, for instance, we mobilize money and lend out this money to people.
Yes.
Will they get banking license? That I don't know what the regulators are thinking, but they don't have banking license. Besides though, if they enter our space, nothing stops banks from entering their space.
It's true.
So people should never worry about
I'm hearing
these
of
things.
technology banks these days as well.
Yes, so banks can also own telcos. So I never worry about these things, because once you have resources, you can turn things in your favor.
Yeah. What about technology itself within banking? I mean, when one looks around what it has done, from the ability to be able to put all our financial lives onto our phones, to perhaps even the intrusion that technology has had in the production processes. What role do you see further in it, in technology playing within the financial space? And also there are these other issues around security and privacy and all these other worrisome things that people are concerned that their bank account is not perhaps the safest thing that they thought it was.
No, well, there is identity theft, or anything can happen. But banks also find ways to make sure that their systems are secure. Obviously, the more people want simple things, the more you want things quickly, the more, I guess, you expose the systems. But the beauty of technology, as you build it, you also build something to make sure it is safe. But there are always these risks. But banks also have got to learn how to manage risks. So risk management is a part and parcel of what we do.
How do you guys do it? Does your chief technology guys sit at the executive level? I have seen instances where some companies have made that position right inside Exco itself because of the growing importance.
They are a part and parcel of senior management. They may not sit at that level, but someone they report to sits at that level. But
should they?
Probably they should, or they shouldn't. I don't know. But I think anyone should always see the value of technology in the organization, the value of IT in the organization, and take them seriously. Bank of Kigali, for one, we've done that. But recall that some of these services can be outsourced, especially technology. There are these other telecom, high-tech companies, fintech companies that are coming into place, and they can also be a part of what you are doing, other than probably creating an industry, technology industry in the bank, you can outsource some of these things.
Absolutely. I'm speaking to Dr. James Gatera. He is the Managing Director and Chief Executive Officer of Bank of Kigali. We've been talking about some of the latest trends in terms of banking. When we come back on the other side, I want to explore a little bit about where he has been and also that divide between work and family that we all struggle with. Tune in the second half. Welcome back. You are watching Captains of Industry. In the studio with me, I have got Dr. James Gatera, Managing Director and CEO of Bank of Kigali. That's Rwanda's biggest bank, and they've got 35% market share. James, 35%. Do you want to go to 50%?
Well, one would always want to do better. But actually, I think it's not 35. It's over 30, but not
over
35.
Okay.
On key metrics like assets, loans, equity, and deposits, we are over 30%.
Right.
Which is a good position we are in. Do I want to be to go
want
to
more?
50?
Yeah.
Obviously, one always wants more. But I also want other banks to do well. I
Sure.
should not be misunderstood. I want other banks to do well, as you know, because, like I said earlier,
Yeah.
I always wish to see a win-win situation.
How is that competition within the banking sector here in Kigali? You probably would have a better and higher view than most because of the position you occupy within the market.
Godfrey, when you have 30% market share, it's very hard to say there is competition. But I do want to believe that among these smaller banks, it must not be easy for them.
Sure.
I'm sure the landscape has changed for them, and which is good because our customers get spoiled for choice.
Yes.
But for Bank of Kigali to say that we are worried about the competition, no, we do welcome competition. Yeah. Actually, it makes us better. And I have seen how competition has made us better over the years.
Right.
So we do welcome competition, and it creates people, it makes people be more innovative, be more considerate. So competition is good, but Bank of Kigali, we are not worried.
Even if, say, for instance, the central bank woke up and said, let's give a license to Barclays to operate in Rwanda.
It's not about the name or about, it's about what you do for your customers.
Yeah.
It's about your understanding of what you want to do and your commitment to implementing what you want to do. Barclays is in Kenya. It used to be number 1. Now it has gone, I think, to position number 5.
Sure.
Why? The likes of Equity have bypassed it.
Absolutely.
KCB, now even Cooperative Bank has bypassed it. So it's not about the name. It's about what you are capable of doing and how you create an environment for a win-win situation.
Sure. So where do you go from here as Bank of Kigali? I mean, more than 30% of the market. Surely Rwanda is a small place in the context of Africa. Is there an opportunity to look outside? I don't know. Are we talking about the region, potentially? Or perhaps Southern Africa comes calling, or maybe it's West Africa?
You know, we are within East Africa.
Yes.
Rather within East Africa. And the starting point, obviously, will be within East Africa. We do have a representative office in Kenya now.
Okay.
And I can tell you, you stay tuned. We are thinking of going regional in a big way, opening, having banking license within the region. Where we start, I don't know, but this is going to be done very soon. And other than also going regional, Bank of Kigali, we feel we want to even to go into other businesses.
Sure.
Into other financial services, but other businesses separate from Bank of Kigali.
Okay.
So in the first quarter of next year, I should be able to tell you exactly. I don't want to preempt the news.
Yes, absolutely.
But we will meet again and I will tell you what will be in place then.
Absolutely. I
Yes.
can tell you now, I'm going to ask Doreen, our producer, to make sure that she puts it in the calendar, and she's
Yes.
calling your PA, and you are booked again in the first
very
quarter.
good. So I will tell you that our
2015.
customers, our stakeholders should stay tuned. There
Yeah.
are big things ahead coming for Bank of Kigali.
Absolutely, and we
Yeah.
wish you well on that front.
Thank you so much.
Before I let you go, I must talk to you about where you have been.
Yes.
Now, you have worked both within government
Yeah.
and within the public sector. When you look, in the private sector, when you look at your work in the public sector, does that complement what you're doing now, or is completely so different that there are different lessons to be had from both?
Actually, I think I'm fortunate to have worked for the government and now to be in the private sector because there are synergies that are created. And you see, especially for working for the government of Rwanda,
Yeah.
there are efficiencies, there are things they do very well that probably the private sector should borrow.
They can learn from.
Yes, they can learn from. And then going to the private sector and looking at, again, of course the objectives are kind of same but different in a way because
Yeah.
private sector, people are looking for profits.
Yes.
But what you learn is it's not the profit that is important, but it's how you get it.
Right.
Because if you don't create value for others, then your company will not be in business for long. So as you get profits, you have to make sure that others are also benefiting from you.
Right.
And this is why I said earlier that our motto is financially transforming lives. As we make money, how are we making money for others?
Right.
So this is very important, and to make sure that we uplift the standards of living of everyone that comes to Bank of Kigali.
Absolutely.
Yes.
And one of the ways in which you do that, of course, is the work that you're doing at Bank of Kigali. But I was looking through your CV and I saw you hold other positions outside of the bank, as you would be allowed to do. You are non-executive director of a number of East African companies, and you in particular are a member of the East African Business Council.
Yeah.
You are also a member of the board of Magerwa here in Rwanda, the National Resources Authority of Rwanda, the Land Commission, as well as the East African Business Council. Which brings me to my next question. East Africa has spearheaded and has led in terms of this drive to integrate the African continent. What is the voice of banking within that? Do you agree with the breakneck speed at which this is being done, or perhaps there's room to look back a little bit and be careful, taking the caution that we've seen from Europe?
I think this integration, deepening of East African integration, will be a good thing for East Africa. Number one, it creates a bigger market.
Sure.
For all of us. We are over 130 million people. And it creates voice for East Africans when we speak with one voice. And then the talent pool that you can find within East Africa. And and I think us as Africans, we should always look at our situation and say, in actual fact, we are more similar than different. And therefore, if we integrate our systems, if our people have free movement, our goods, there is free movement of goods and services, we end up benefiting, all of us. So we should not fear. I've seen what our country has been able to do by removing visa restrictions. If you're an African holding an African passport, you come to Kigali, you get visa on arrival.
Witness.
Yeah, very good. You can see how this is working. It does not create stress on anyone. And there hasn't been any negative consequences because actually you see more positive things.
That was Dr. James Gatera, the Chief Executive Officer of Bank of Kigali. That's Rwanda's biggest bank, sharing with us his journey so far and some of the things that he has picked up as he grows the bank and tries to extend its reach to Rwandans. Thank you for joining us today on Captains of Industry. Until next time, goodbye.